You want to know what's going on with the stock market. Should I buy stocks now or wait? What's the latest CPI data say? Is inflation going higher? Is the Fed cutting interest rates? We'll talk about that, and I'll also share 5 stock charts, including Nvidia and Tesla, and tell you where I think the stocks are headed next. So the theme song of 2024 so far, Rage Against the Machine, Bulls on Parade. CPI, headline, consumer prices rose 0.4% in February and 3.2% from a year ago. And you can see the month-over-month percent change. Of course, it's a lot better than 2022, but this is a little higher than expected today. And this is a good visual here, just showing you how high inflation really got, up to 9% in June of 2022. And it has come down quite a bit, but the Fed wants to be at what? 2%.
But I think there's a bigger picture, and that was picked up yesterday by the New York Fed Inflationary Expectation Survey, and that is inflation expectations are stuck just under 3%. And that's, I think, is our reality for a while.
Those inflation expectations, that's a leading indicator?
It is. It's ask people, what do you expect for the next year? What do you expect for the next 3 years? And what do you expect for the next 5 years? And the next year is 3%. And then when you go to 3 to 5 years, it's 2.7 to 2.9%.
Now, this is something that we discussed a lot last year in Fired Up Wealth. Does the Fed have realistic expectations to get down to 2% quickly? How long is it actually going to take?
So still far away from what people tend to think of the Fed's inflation target, even though that inflation target is applicable to another measure. Yeah, unlike the market that's been on a roller coaster, we were pricing in as many as 7 cuts, then 2 cuts. Now we're at 4 cuts. We were pricing in at one time March. Now we are June. The Fed has held a steady course. 3 cuts most likely starting in June, and that was reaffirmed by Chair Powell. And I think, Becky, that is the right outlook. That is what I think should happen given the economy that we are living in today.
Since last fall, I've been telling the community we're not going to have 6 rate cuts in 2024, and now it's looking like 3, yet the market doesn't seem to care. The market is looking forward. And like I said, bulls on parade.
Even if that inflation number comes in hotter than anticipated, you don't think that'll push things off? Because Jamie Dimon, speaking yesterday, said he thinks maybe the Fed shouldn't cut in June, maybe wait and see how the numbers go and give themselves a little room. He actually suggested that the Fed's credibility is at risk if they cut too soon.
Yeah, or they can stay too tight for too long, and then the credibility will be at risk there. All this has a critical issue. What do you think is the right underlying inflation rate, or what economists call the neutral interest rates? What do you think is the equilibrium rate? If you think the equilibrium rate is 2%, that's what the Fed should be targeting in terms of inflation, then they should hold off. If, like me, you believe that we are living in a world where supply is insufficiently flexible and that you should aim higher than 2%, tolerate more than 2% for a while, 2.5 to 3, then we are restrictive and they should cut. So all these discussions lead back to something that people don't like talking about, which is what is the right inflation target for the world we live in today.
So that should help explain why the market is green when the news really wasn't all that great. Now, one thing I want to point out here, I think it's just a good visual. This is going all the way back to 1983. And this is the median consumer price index. Obviously, it went bonkers here in 2022 and it dropped off nicely, down to around 2.5 in July of 2023. But look at how this has spiked back up. And of course, the data is lagging, but January 2024 here is a 6.54. So what do you think? Should the target be 2.5 to 3%, or should it be 2%? And should the Fed be cutting rates? Drop me a comment below. Let me know. Right now, the market, of course, is bullish, and the momentum shows quite a bit more upside. Now, of course, that could break down anytime, and the macro is going to be important. Obviously, the fundamentals of each company are also very important in earnings. We're nearing the end of earnings season, and we're in a historically weak period in the market. With that said, when you look at election years, they generally are going to end the year higher than they started. So looking at the Nasdaq 100, this is the QQQ ETF. Anything in orange is a previous chart day. We do that every single Wednesday in Patreon Discord. But you can see in yellow, we have $428 support on the QQQ and the upside is $465. Of course, it could break down any time, and you can see the 200-day moving average is way down here, around $385. And we drew this circle up some time ago and said, here's the trend upwards, and we might have some consolidation along the way, but the trend at this point is up. Let's take a quick look at Nvidia's chart, see where the stock might go. Now, this was a pound the table buy both on YouTube and in Discord at $150 or less. We've been covering this stock since 2019. It's been a top pick for us. And right now, if you look at this, previously we said that it was probably going to go up to the R3 around $950. And it's not a coincidence that Nvidia found resistance and consolidated once it got slightly above that R3. So it got to $974 and then it rolled over and it went back down below the R2. Assuming the market stays bullish, watch for it to get back to 1,000 and probably break the 1,000, maybe get some resistance again. Then you're looking at 1,100 and 1,250. Now this video is showing you technical analysis. Obviously the fundamentals are 99% of the puzzle, and a chart's just going to give you possibilities. It's not a magic bullet. It's not a crystal ball into the future. Generally here at Fired Up Wealth, we're all about long-term investing, buying stocks at attractive prices, dollar cost averaging, and holding for several years. Not buy and hold forever, but buy, hold, and monitor. If the story changes, you don't have to hold it forever, you sell. In 2022, we were looking at the fundamentals of companies and saying, hey, these are attractive, and the risk reward is attractive here, even if they can go lower. AMD, it was overbought. The RSI got a little hot, needed to cool off. Same kind of deal. Went above the R3. Now, stocks are often going to go higher than you think they will on the upside, and they do the same thing on the downside. So in 2022, in my opinion, a lot of stocks were overdone, and they were great values, they were great buys. Now you're looking to buy stocks, you're probably chasing all-time highs, and a lot of these names are close to it. This was a pound-the-table buy, $65 or less, both, again, YouTube and in Discord. But with that said, AMD's got $192 support, and it could go to $250 plus, but be careful chasing with all the stocks that we covered today. Now, of course, there are two ways to do it. If you're investing long-term, you dollar cost average into stocks, and you can do it in two ways. You can buy levels from technical analysis and try to back into a position based off a blueprint, or you just periodically buy. Every single paycheck, you just nibble your favorite names and ETFs every time you get paid. And you're buying stocks when they're high, when they're low, you're consistently buying, you're thinking about a 5 and 10 year plan. If you're trading, well, it's a different story, and you're going to trade off momentum. Now, out of the 5 stocks we covered today, I own all of them, and I have great cost basis in all these stocks, except for really one, and that's the stock that I'm buying at these levels and lower. Can you guess which stock it is? That would be Tesla. And we said recently that it bounced off $175, it'd probably get to $200 plus, and maybe find resistance again and roll over, and it did exactly that. This actually has resistance at 193, so it's trading below that resistance. The other stocks all have support, and they're higher. So you should expect more pressure unless it breaks $193 again. And the range on this is really between $137 all the way up to $214. I personally like the 165 to 175 range for dollar cost averaging, but keep in mind, if we go into a recession or something really ugly happens with the market, Tesla could easily be a $100 stock. Now, long term, I'm bullish, and I think this stock will be a long-term winner, but this is not the environment for it, and it's much more interest rate sensitive than some of these other names. Plus, like we talked about in the last video, the AI revolution hurts it in a way, because even though this is an AI company in many people's eyes, it doesn't have a way to monetize that currently. And so like we talked about last time, is Tesla a car company or is it a technology company? Drop me a comment below. Let me know what you think. Palantir is another stock. We've been bullish on this stock since 6 months before it came public. It came public on a direct listing. We were buyers at $9, and then recently here in 23, $6 in that range. Really between $6 and $9 is where most of the community were buying the stock. And this does have $22.70 support, so watch for $30. In fact, this R3 up here is around $31.71. The downside risk, you could see something like $16 to $18. And you can see a lot of these stocks, they're above their moving averages and they're running hot. You know, looking at a trend line, this is down here at $10. The 200-day moving average closer to $17.50. So on a big market sell-off, could you see it come down in these levels? Absolutely. Now the flip side to that, this is a momentum name. A lot of retail investors are very excited about the long-term prospects of this company, of this stock. And so it certainly has upside. And again, I think you could see between $30 and $35. Is it expensive at $25 a share? The answer is absolutely. In fact, out of all the cloud SaaS names, software as a service, this is now the most expensive stock. And really the first time ever. Snowflake was on top of that chart for as long as I can remember. Now it's Palantir. And I know a lot of people want to compare Palantir and Snowflake, and it's kind of this rivalry. Almost almost like the Vikings and Packers or something like that, right? Or maybe the Eagles and the Giants, or the Cowboys and the Eagles, or whatever you want to compare it to. I like both companies, and I like them for different reasons. They're both great AI plays long term. And I think you can own both Palantir and Snowflake in a portfolio. I personally like to buy stocks at attractive prices though, and not chase them when they're really expensive. So I'm long Palantir, I'm bullish, but I own the stock much lower. I've got one more chart to cover. Before I do that, if you're maybe new to investing, or you're looking for a way to dollar cost average into an ETF that's trying to capture these secular growth trends, that owns companies like Nvidia and AMD and Tesla and CrowdStrike and more, one ETF you can check out, the ticker is SPRX. That's the Spear Invest ETF, the Alpha ETF. And that performed over 70% in 2023. And it's got a lot of fired up wealth favorites in that ETF. We covered 5 charts today. 3 are bullish and 2 are bearish. And this is going to be bearish along with Tesla. This has $8.77 resistance. This is SOFI. This was a pound the table buy and fired up wealth, $5 or less, or 1 price to book or less. And I do like this one long term as well. One of the dynamics here is the market's trying to label this more as a bank, and retail is labeling it more as a fintech. Drop me a comment below. Which is it? Are you buying SOFI? And should it be valued higher as a fintech company? It could bottom any time, but really needs to get to that $9 level for upside. If this video is helpful to you, I'm bringing new videos every single week. Subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Take care.